Hey guys, welcome back to Seller Sessions. Just a quick one today. Read an interesting article. It's a bit older now. Been meaning to do something on this for a few weeks now. So this is on Marketplace Pulse. I'll stick it into the show notes. So it says the gold rush to fund Amazon aggregators dry up. So I think we're all realistic. The people that are in the industry now, you have seen a lot of the shifts changing. We've seen some good businesses go for a lot of money over a lot. A lot of my friends have exited with really good multiples. But with every market, there has to be an area whereby the market's flush with money. There are people out there raising, they've got commitments, they've got investors, debt money's cheap, etc. And then there always has to be an adjustment to the market. So I'm just going to read out some of the elements from this article, and then I'm going to bounce off them. So Amazon aggregators have raised just 2.2 billion in the first half of this year after raising 5.1 billion in the first half of 2021. The race to launch and fund new aggregators has ceased. Only 12 new aggregators announced funding in the first half of 2022, attracting a combined 1 billion. The rest of the 2.2 billion raised went to firms raising additional rounds. Okay, so for comparison, in 2022, new aggregators announced funding for the first half and 17 in the second half of the year. The new aggregators were Ruby brands from Turkey, brands from Finland, Evenflow from India, Wholesome and Boosters from South Korea. So we're seeing a bit more of a spread out from where this money is starting to come from in terms of the countries. Go north from Sweden. Big shout to Johan, a seller as well, really knows his stuff. The mothership from the United Kingdom, Flummox from Switzerland, Yabba from Spain, Rio Grande from Mexico, and Society Brands and Dragonfly from the US. So there's some charts in there to have a look at. So the next part of it is saying low interest rates, e-commerce historical growth, cheap multiples, and headlines about other companies and other first aggregators drove most of the investment in 2021. That euphoria is now dissipated. Capital is getting more expensive. E-commerce growth become flat. Increasing costs squeeze the margins, and multiples continue to increase up until the end of 2021. So we've obviously seen a lot of shift and move in the market. The Marketplace Pulse, I think, done the article about 5 or 6 months ago, because obviously it was reaching a peak of multiples going up as far as 6, 7, 8, and we've had guys on the show. If we think about Elevate Brands and Frasio, etc., really good people have been on, and people they were having to turn down some of these deals because the requirement on the multiples was so high, there was no way of making money. But then the people out there that were quite new to the game who wanted to raise funding would take that punt, or because they haven't seen it historically. So when you look at a spreadsheet and you're new to the business, you're good at MMA, you're good at raising funds, but you may not have the depth of knowledge, especially domain expertise on the brand by brand level that a seller would have. People are going to obviously take those opportunities. They've raised the money, they're going to have commitments, and they need to give confidence to their investors. Therefore, they're going to overpay for stuff. And we spoke about this on the show. I think it was when I had Dan Ashburn on, and he escapes me now, but there was 3 of us and we were kind of talking about this. We all know it's very interesting times in that these multiples are starting to come down. I think they're leveling out about 3 to 4x, which is more realistic. Now, I think what the difficult part of this as well is we Adam Heist, that's who it was. The other difficult part of that is that, let's just say as a seller, you're watching other sellers around you getting really good deals, but in the peak of that market. So they're going, yeah, I got 6, or well, they shouldn't tell you because they'd be under confidentiality agreements, but let's just say they're saying, yeah, I've got 6, I've got 5, I've got 7, I've got 8, etc. Some of those are unique. And it's very difficult, I suppose, now for a seller to warrant selling their business because they're going to be felt shortchanged. Meaning is, well, if they got that and I'm getting half that, then what's the point of selling my business? Because part of that is, well, I'm not going to get what they're going to get, so why bother? So let's carry on building, which is true. Why shouldn't you carry on building? And I think with the the situation when that kind of money comes into the market, the companies will start off with buying what they feel is the very best brands. So they're going to be looking at the top of search to buy those first. And as they move down, depending on their deal flow and power in the market in order to get deals done. So you've seen kind of across the industry as well, there's companies that are on pause, you've got MMA teams leaving. And that doesn't mean it's a bad thing for the brands, because some people are now going to be hunkering down to go, right, I've got all of these brands to deal with anyway. We must find a way of streamlining this. And I think one of the hardest things for them is always going to be is when you've got a bunch of brands like that, a lot can go wrong, especially in logistics, especially in domain knowledge. So it becomes very difficult or you think about yourself on your own Amazon business. Imagine having 20 of them, 30, 50, 100, unless the whole team moves over and the founder goes with it, it's going to be hard to steer the ship when you've got a team of account managers, brand managers, etc., whatever you want to title them. And they're going to be going, okay, you've got a new brand, you've got to run this, and you don't have any domain knowledge. Like, when normally the best brands are people that are passionate or super knowledgeable about their own brands, right? Whether they learned that in the job and become passionate, or they had previous domain experience from the field, which converted over to the part of selling products online. They may have been into fitness, or they may have a background in chemistry in terms of formulation and stuff like that. So they can use those skill sets to bring them over. But imagine if you're working at a company and you're being allocated brands, you won't necessarily have the domain experience, and you're spread across a series of other brands. So on a monthly basis, one of the hardest parts is how are going to keep hold of these people and then drum up enough domain experience. Well, you can say, well, someone's on an earn out and they're going to be with the company for a year, and that's cool as well. But there is going to be a point where also the entrepreneur may turn off in a few months. Obviously you're passionate about your brand and everything. You've got less control over that brand as well. And it might get to the point where people are making the decisions above you when you're in the earn out process. So you're kind of, well, why do I bother? I've said this, I'm going to do this. And then it never gets done. So that becomes a factor as well. And when we go back to the point of selling the top of search, you've got to understand is that there's going to be waves. And I think I've spoken about this before, and what I've said, and I've observed this because I notice about the speed. I know a lot of sellers, I know a lot of aggregators, and I've seen a lot of deals get done. And the thing that I notice quite a lot, and it seems to be a common theme, but I don't have enough data to prove it. If you're already a brand and you have two brands and you sell one brand, you are still in the game. So that means you haven't taken a step back. Now, if you've only got one brand and you haven't started a secondary brand, there's that thing where the money comes in and you go, right, okay, I need to get to the next stage. So you might do some investments, you might go on holiday, you might upgrade your lifestyle, etc., etc. And then there's that moment where, okay, I've got the monkey off my back now, got money in the bank. Let's get some samples done. So you get samples, but you could be in that process for samples for a long time, because it's not that you're overthinking it, you're taking your previous experience. And I'm going to come back to the top of search because this is where it's relevant. So you end up taking, instead of coming straight back, unless you're running an existing brand, those people kind of come out the market for a period of time, or they don't come back. So you may find is that by the time they get the next brand going, what will happen is they may be 2 years down the road because they haven't got the existing brand, or they don't come back. And we've also done a show a long time ago, Dr. Ellis Whitehead, Evelyn Demirov, and stuff like that. You have the element of the luck of the Amazon seller, okay? Because you may pick a category and your timing is perfect. So let's just say you started selling 15, 16. But now it's 2022. You can't always apply that skill set and transfer it over into a new category in a different time frame, because the game's different. It doesn't mean that you're not up to date, but it doesn't mean that you will guarantee to win with inside of that. So what can happen, and we've seen it a lot, I've seen lots of accounts, thousands actually, you find that someone goes, done really well here, and then we're going to try and go into this category and we're going to apply all this because it worked there, so why shouldn't it work there? And often it doesn't, because there's an luck element. It's the same where you can't launch 10 products and everything. All of those products is a hero product, or you launch 100 products and you get 100% conversion rate. There's always going to be, or what I've seen is that 80-20 rule. You know, you're always going to have the ones that do really well, and then the also rans and the ones that you need to get rid of. And what you seem to see is that most successful sellers that are able to scale is because they're stacking SKUs. So they've got a war chest of cash, and they're very good of not taking it personal when a product is not working, and they find a way to get rid of that product really quickly and then move in to launching another product. And there the system goes, having a good product timeline and stuff. Now, going back to that point at the top of search, then what you'll have is what is deemed or considered the best businesses have been bought, because the next wave have got to come through. So then what you're left with is a gap. And that's where I think we are at the moment. We're in the gap. Now, that will change in the next 18 months to 2 years. I think what you'll see is you'll see multiples come up again. Not right now, because people are hunkering down. Those guys that are in preserve mode, because they may not be able to raise more money, their focus is to make the current brands that they bought a good investment and a good return on those. The troublesome aspect of it, as we know, with the war and stuff, material costs going off, you know, we've discussed it tons of time. We don't have to keep talking about the problem with logistics and stuff like that. And then you've got the the variables that you can't account for with regards to Amazon, that no matter how much planning you've got, it doesn't mean you're going to come out on top, or it's going to work instantly and stuff like that. So I think we've still got, as a community, we've still got a strong market out there. Businesses are still being bought, but I think on both sides. So when you might say the aggregators are moving, say, the bar up, where they may have bought somewhere around the 1.4 million, which is considered the bottom end of the market, and they've got a good SDE in there, then that was okay to do those deals. But now the shift in terms of margins and unforeseeables and non-controllable elements in the market, like material costs and stuff going up, you find that then the bar goes higher. So those guys that would have been bought a year ago is now shifting up. And so you've got clear indication that people are on pause when they let go of their MMA team. Unfortunately, that is part of it. You do your best to grow something, but you can't effectively have them sitting around doing nothing. And unfortunately for them, and we say this with respect and empathy, there isn't any work for them. So they can't carry on being employed. So the flip side of that as well, some would maybe say, yeah, we're still active in the market, when realistically they're only active in the market if they're buying a unicorn. They're not saying that. They don't want to say we're not active, but unless there's a unicorn comes up, I think most of these guys that are considered on pause, unpublicly not announced on pause, if a unicorn will come along, they too would purchase that unicorn. So I think what we're looking at now is that there's a hunkering down process. That's going to last 18 months, and then we'll start to see a bit of a shift around. You know, you're going to see who's going to still be around in the next 18 months on aggregation level. There's a lot of companies out there. We must remember these guys have brought money into the market to make it possible for lots of Amazon sellers out there to exit their business and walk away with legacy money from the table in a lot of cases. So it's been a great ride, and it hasn't stopped. But I think we just need to be realistic of what's going on out there and on both sides of the table. Going back to my point again, if you've got a situation where aggregators are either on pause or they're moving that market up and your margins are going down or your growth starts to slow, that becomes less attractive. So you're caught in that element there. The aggregators are not going to touch it because you fall below the requirements of the bar they've raised to be set, so that they know that there's plenty of opportunity there to either grow that business or take a risk on it so that they can turn it around and make it even more profitable. So I think we're coming close to the days of, and I've seen some shocking deals. When I mean, like, some of the brands, I'm like, I've spoke to people and I say, take that money and run. It's like you got to steal there. And everyone knows I've always been in support of sellers while still very supportive of aggregators. I mean, some of our events can't be supported without their money or without their investment. And you've seen that side of the market as well. And I've got a lot of respect for aggregators and people in this business because it's helped change the lives of Amazon sellers to go off and make that money. Because if you think about it logically, yeah, it's always had the opportunity. There's been brokers around for years, for instance, before this whole rush come in from late 19, 20, 21, 22 of aggregators. You've always been able to sell your business, but now it became ubiquitous. You know, it was in the mindset: we'll build, we're going to sell, we're going to build, we're going to sell. Obviously, that shifted for now, but I definitely see there'll be changes coming back. You know, when something goes up, it has to come down and level out. It's not it's like that with any industry. But the point I want to get to is that let's look at when you look at SaaS businesses, etc., or innovative businesses where it takes a long time to get to revenue. You know, like people go into Silicon Valley, they raise angel money, and then they start going through a series of rounds, etc., to raise money. And normally what you need a shit hot programmer and a sales guy or girl who are on the team. Now, normally that's the ideal foundational partnership of a technical startup. Is you need good technical skills and you need a good salesperson. So in that world, it works, and there's a lot of work to go and raise that money. But we don't have that as Amazon sellers. It's pretty much that people can come along and have a certain skill set that they can develop a little bit further, and it goes a long way, and then they can get an exit for themselves. So it's almost like, and I say this with greatest respect, is that you don't need as much experience or technical skill to be an Amazon seller when you compare that to a technical startup, you know. But you still got a similar level of opportunity in the way that you can build something and you can exit it. Because when we were looking at, say, 2015 and 16, back then it was easier to get to seven figures. You could get there quite quickly, easier to get reviews and everything else. But obviously that's changed a lot now. But even back then, it was like, well, where do you go? And I know a lot of sellers that they built to seven figures, and then they kind of done the Tim Ferriss 4-hour work week. They got it to a level and thought, oh yeah, great. And so they'll go and do other stuff in terms of businesses, or take some time out for themselves and travel the world and stuff like that. And then kind of come back, and then the world's changed for them. So then they play the defense mechanism, the defense role of trying to maintain, to keep them products going. But each year, new people, more sophistication comes into the market. And so that was a period where you could sell your business. It wasn't ubiquitous. There were opportunities to do it. But obviously now the opportunity, or we've seen in the last 18 months, 2 years, you could build and you could exit and you could get some good money on the table. And we had high multiples. I don't think we're going to see 7 and 8 again. You may get some 5 and 6s. You're going to get some unicorns that come along, but I think the everyday Amazon business won't necessarily reach that. You know, you might get up to 5, 5.5, and I may be wrong. You know, what do I know? I'm just a podcaster, but I've seen a lot of adjustments in the market, and it's been really interesting to watch this whole thing unfold, especially for sellers. And I'm looking forward to where the next 18 months go. I just want to see if there's anything else on this article So saying here, not everyone is struggling. However, acquisitions are still happening while the industry is readjusting to the lessons and mistakes. Most of the capital raised is yet to be deployed. So sitting on the capital there and making sure that the current brands that they've been bought is going to be one way that keeps their cash flow going and keeps the runway open. It says even if the debt confidence are sometimes an issue, for some that meant pausing acquisitions, for others accelerating deals while the market is full of uncertainty. For others, that's meant to retaining the founders or their teams rather than purchasing only assets. Goes back to my point. Can you keep hold of the founding team? I know some friends of mine at Aggregators, they were very smart in that when they did the purchase, they brought the team members on. That kind of helps locks things in terms of domain experience as well. So that's been a very, very smart move to do that. So the industry attracted over 15 billion in less than 2 years. Most of that 12 billion just came in 2021. A lot of that company capital funded business models that by now had to change materially. Funding figures will significantly smaller this year, and investors have little appetite for more aggregators with the same pitch deck. So it says, at least not yet until some clear winners emerge. Now, I still think we're going to see some good winners come out of it. But it's again, the 80-20 rule. You know, if there's 100 aggregators out there, you know, it's survival of the fittest, is crabs in the bucket climbing out, and some are going to win and some are going to lose. It's the same with Amazon sellers. This is what we do, right? We're in business. It's whether it's friendly or not, it's still competition. It's a zero-sum game in some cases. Like you're going to have winners and losers, and that's just a fact of life in any kind of business. But I think when you see that adjustment come, whereas I believe it's been a seller's market for quite a while, we're now back to a buyer's market. But then it comes back to my point earlier on in the show when I said that, you know, if you're a seller and you see your fellow sellers selling the business for twice the multiples that you're being offered, it's a bitter pill to swallow to actually sell that. So I think we're in a good space right at the moment. We just have to be realistic in the times that we're in. But I still see the future's bright for everything. And yeah, I'm just going to sign off. That was just my take. I've been thinking about this for a little while, and I just want to share that with you. And I'll also put the article in the show notes. So take care of yourself and your family. Much love, and I'll see you again.